talk about often. Some people even base their strategy on firing, so taking a trade and then forgetting. I want to give you a little bit of perspective on this. I don't believe that's generally possible for any trade, and I'm switching here on the chart because I want to show you some examples. Actually, I will work only on examples on this in this section. And I want to take the example of the euro dollar. The reason I'm getting the euro dollar here, I'm using the euro dollar, is because it was one of the recommendations we had last week. And if you remember, the analysis that we did last week was actually very, very simple. We had a 50% retrace that eventually started finding participation at the beginning of October 1243, and that pushed price into the first and second target. As you can see here, there were areas where Algos have taken profits, smart money have taken profits. So last week I mentioned a level, and that's the lows to lows, and indeed we saw a participation from that level. And now I'm going to bring you down to one time frame. What you see here on the screen is the daily time frame. As you can see, the market, I gave this level last Wednesday, and we were here. That was the day, I believe, 26th, and the market went 2 more days higher. On Friday, we saw this huge bar higher, and the market got into that level, the 109.90 level, which is the level I gave you last week. After that, when we move to the 240 minutes here, we see that the market has actually reacted to that level. Let me remove all the other noise there. We don't need that at this point, not yet at least. And this is the participation from smart money. So going back to the context of actually selling in this case and forgetting, would that have been a good strategy? As you can see here, if you only look at the smart money, so the levels that are actually participated by Algos, we saw that participation on the downside. Okay. However, so you might think, yes, I could actually sell here, maybe put a stop above a 61.8% level, and then just forget about it. The point is that this is a clear example, and you often find examples like this where you have to take into account also other participants. Look at what happened here, and just focus for now on the smaller moving average here. This is the 4-hour 26 and 13. The red is the 13 EMA, and the 26, the blue is the 26 EMA. As you can see here, the smart money sold this market, but then dump money on the 4-hour time frame has bought this market. Okay, and market went into the area, and then there was participation. It could have happened that there was no participation or little participation in this area, and the market would have just continued lower. I think this offers, a practical example and very recent example that we cannot simply just fire and forget. And that's also the reason why I never buy or sell at these levels. People who follow me and study, they may know that we always test these levels. We need to identify a sequence of measure move and only enter short when the long sequence on the smaller time frame is violated. Okay, so in that case, it was violated, and it offered even a risk-free trade here. But what happened is that there was no follow-up in this trade, and obviously, the reason was participation at this level, prompted also by selling in the dollar index. Okay, so this is a typical example of case in which fire and forgetting would not work. Now, this week we also had another recommendation, another trade that, on the other hand, worked nicely, basically on the same type of setup, and that was the euro versus the Swiss franc. And you will remember here that, and this is again the 4 hour, let's look at the daily. The recommendation last week was to actually sell any retrace into the 108.50 level. As you can see, this is not the previous low, right? It's even a previous low here, but most importantly, this is an extension short, and that was identified using the rules that I teach in the FibStalker Nervous Coaching Program. So what has been different in this case? In this case, had you sold the 108.53, which was retested here, as you can see on Tuesday? This was Monday. This was last Friday, Monday, and Tuesday. Tuesday, that level was retested. It was retested on Monday as well, and we saw strength here in response to and following the strength in the euro. But in this case, had you sold the 108.50, which was level recommended, you can see that in just one day the market went into the first target of this measured move. Okay, so if you traded this, you would believe that fire and forget actually works, because you could actually sell here, put a stop above, and just wait for the first target to be hit. These are two different situations. Whereas in this specific case, smart and dump money on the daily time frame both agreed. So obviously, this trade particularly had less risk. But yet, it does not mean that you can actually simply sell these levels and forget about them. Trading requires a little bit of maintenance, and that depends. I mean, we're working on daily here. If you take the opportunity on the weekly, that maintenance may be needed on the daily time frame, so once a day. However, as a trader, obviously, you have to watch your charts. And I personally do not believe, even in a case like this where the trade actually behaved as anticipated, that you can just let your trade go. Of course, if you use a wide enough stop, you can let this play out, and you accept the risk and the loss. If that happens, you can let this play out. And again, look at what happened here. The 4 hours bull money here eventually gave way, and you could have sold here at this point. However, the market came back, never challenged the highs, actually printed basically the same highs here, and then only then it started to move lower. Okay, so these are only two examples that show that we have to be very, very careful when it comes to fire and forget. And in fact, actually, I personally don't believe that is an option in trading. Forex, which is typically very volatile, but I believe it's not an option also in trading futures or generally stocks with gaps and news. So we have to take a balanced approach. There are cases like for example, at the beginning of the year, if we go back to the US dollar Japanese yen, I've been trading it heavily at the beginning of the year, and we also had the FX Street. In the FX Street show as well, we made call before the fact, a number of them. And in cases like the 50% retrace, which we called here in February, this was a 50%. So smart money selling this level. Plus, we had the bear dump money here selling. So when it comes to certain signals where both the smart money and the dump money agree, for example, in this was another case, right into that first target, and then he retraced again into the next measured move. So in these cases, when dump and smart money agree, obviously the risk is lower, and you can think of strategies execution strategies that are similar to the fire and forget. I like always to monitor my trades. Okay. And this concludes this first part, which is a brief discussion on fire and forget in trading using euro dollar, euro Swiss franc, and US dollar Japanese yen. Thanks for watching.